And now it's time for our first panel discussion. And it is on SME IPO. And to go ahead with the panel discussion, I request Mr. Avik Gupta, Senior Manager, Primary Markets Relationships, National Stock Exchange, to kindly please join us here on the dais. Can we have a round of applause and welcome him on stage? Please put your hands together and let's welcome Chairperson, FADA Delhi and Director, Go Auto Private Limited, Mr. Ajay Agarwal. I would also request our Director, Business Bulls, Mr. Prakash Agarwal, to kindly please join us here on stage. Welcome, gentlemen. I request Mr. Agarwal to kindly please take forward with the session. Thank you.
Hi. Thank you, everyone. And, it's a pleasure to be here at Bengal. I am a dealer in Delhi representing FADA. And I was requested by the team to lead this panel for the raising capital through public market. So we have Prakash and Avik with us. Money is the key ingredient for any business to be scaled. And auto business as such, we know is a highly capital intensive business. The total investment in the business is close to 40,000 crore in terms of working capital and the infrastructure which dealers have invested. And this money is all primarily being funded as of now by the dealer families and the bank debt. There are only 2 dealers which are listed as of now in the stock market, which is got listed in the last 2 years, which is Landmark Cars and Popular Cars. Whereas in the similar space, there are a lot of other businesses which are getting listed, approaching the public markets. But auto business has not been very active in the public market. We feel the next wave of growth can come when we bring in fresh capital to the business. Fresh capital not only brings the capital, it brings a lot of talent, a lot of transparency, a lot of growth in the business. So the expectation of the industry is that more and more dealers approach public markets so that we can take business to next level. That's the intent of this panel discussion today. So over to you, Avik, for your thoughts. How and why auto dealers should approach capital market?
Right. Thank you so much, Ajayji, and a very good afternoon to all the dignitaries on the dais and off the dais. And before I start, I would like to thank the office bearers of FADA for inviting us here and giving this opportunity. So basically, coming from the stock exchange, I would like to say that, of course, most of you are aware of National Stock Exchange being the largest stock exchange of India. And many of you might be aware that, IPOs of larger size like, say, Hyundai Motors and maybe, Swiggy, Zomato, they all come in the NSE platform. But many are still not aware that NSE has a very robust platform for the small and medium enterprises. And more than 606 companies are listed in the SME platform. And this platform started in 2012. And till now, this number of companies are listed. And particularly in the last couple of years, large number of listings have happened. This year, 147 listings have happened. From West Bengal, 28 companies have filed DRHP from April 24 to February 25. So you can understand how much penetration this platform has done among the SME companies. Yeah, Ajay is right that there are 2 companies who are into dealership who have come up with their IPO, but there are a large number of auto and auto ancillary companies who have come forward to the market. I can give you an example of a company called West Bengal called Delta Auto Corp. They manufacture a brand called Deltic. They are into electric vehicles. They came up with the IPO this year only in Jan 2025, and the IPO was around of it was around 54.60 crores, and the issue got oversubscribed 342 times. They have more than a 1 lakh square feet manufacturing facility in West Bengal. So similarly, in last year, there are 8 companies from the auto and auto ancillary industries which are listed on the SME platform, like M Forts Auto, Mandip Auto International, You have Forge Auto International, Bikefu Green Tech, and there is also a dealership called Resourceful Automobile, which got listed in the BSE platform. So, large number of companies are looking forward to this platform because, as Ajay rightly said, that finance is a constraint, particularly for the growing companies, and many of them are not preferring bank these days, particularly also because the capital market has become very robust in India. There are a large number of demat account holders now who are participating in the market on a regular basis. If you see the mutual fund industry, record SIPs happening every month of 25,000, 26,000 crores. So since the capital market is robust, it's a good time to take advantage of this opportunity and look at the public market for raising funds. It can be for your capex, it can be for your working capital, it can be for your acquisitions, for any other general corporate purposes.
Thank you, Avik. Over to you, Prakash. Why do you think auto retail entrepreneurs should go public? What are the key advantages they can get when they approach the public market?
Thanks, Ajay ji. First of all, I begin by thanking the FADA office bearers, all the members of FADA and the participants here. Basically, this question is not about an IPO or not an IPO, it's about capital. So if we want to expand, we want to grow, we want to scale our businesses, one of the resources is capital. So you can either get it from debt or equity. Debt has a bearing, there is a fixed cost to debt, and that is perennial. Year after year, you have to service the debt and you have to pay it back. When you approach the capital market, there are certain internal restructuring to be done. Once you approach that, you are able to achieve that, then that capital is available to you as a growth capital, and practically there is no reason why you have to return that money back. Rather, you will be enjoying that money through the growth, and the investors will be happy that their money is also growing with you. So effectively, practically what you have to look at is that what are you looking for? Are you looking for the money for the growth, or are you looking for a short-term deployment of fund through some means? And as I understand your business and the industry as it is, the automotive industry is around $135 billion industry in this country. And you'll be shocked to know that this is as big as the steel industry in the country. Probably this comparison was not done by anyone. Now, also think about it that how many of you are, like if I ask you by a raise of hands, how many of you are registered with GST? Probably everyone would say that I'm registered with GST, but how many of you are registered with SEBI? I don't think there's anybody in the room here who is registered with SEBI. So it's time for you to now introspect and see that why don't you get into the growth journey, join the momentum which is there. As Avik already mentioned, be it SME platform or the main board platform, SME, there are around 1,185 companies which got listed so far after 2012. And there are more than 5,000 companies on the main board. So whatever is your scale, I mean, you can choose the board, that depends upon where you are. But capital market is something which you cannot miss today, because your step taken today will decide your future tomorrow. So I think that should be continuously evaluated in the organization. And I understand most of you are family-owned businesses, so that needs to be looked into very seriously at this stage, because you may miss the bus. Your next house neighbor may be kind of doing it, and you may be following him after some time. Thank you.
Thanks, Prakash. So, Avik, since you come from the platform, the audience would like to know the timeline. If somebody wants to go public, what are the kind of timelines? What is the compliance burden? There is a huge misconception, or they may be right, that there is a huge compliance burden which they have to undergo if they go listed in the public stock exchanges. So if you can throw some light on that.
So first of all, I would say that the main board which we are having, that has larger compliances, and the SME board which we are having, there the compliances are quite less than that of the main board. For example, if you see the main board companies like say Landmark or like Tata Motors, every quarter they are required to submit their financials, but the SME companies are required to submit their financials half yearly. So the quarterly requirement is not there. So,
No, so see, the compliances, if I say,
Right.
since, most of the business is very debt heavy. So all our banks ask for provisional statement, balance sheet and all on a quarterly basis. So most of the dealers would be preparing that in any case.
So basically, I would say that many of you might be a private limited company already. So as a private limited company, you are already doing compliances which a listing company does. It is just walking few extra steps and doing certain things on a structured basis. So there is a deadline for submitting financials, there's a deadline for submission of the annual report, etc. Those needs to be streamlined. Otherwise, of all the SME companies which are listed on the platform, there's nothing in the compliance which is a hindrance to them. They get used to it pretty fast after they get listed.
So if I understand that, you saying that compliances are very similar, but it's more of a discipline that has to be brought in.
Exactly. It is a system which you need to bring into place. It is the kind of the deadlines which you need to follow. And since you are in the public market, you yourself will have this urge that I will bring more transparency into the company, more corporate governance, etc. And more corporate governance transparency is brought into the system, more that will reflect in the performance of your shares in the market.
And on the timeline, what is the kind of timeline does it need for somebody to start thinking and getting listed?
So Ajayji, we always say that there are 7 steps for getting listed. First is you interact with the either a merchant banker or the exchange official. So as an exchange, we are sitting here today. Second is you engage a intermediary called a merchant banker who does the entire work for you and prepares something called a DRHP, Draft Red Herring Prospectus. It is filed with the exchange. In the SME platform, NSE only gives approval. The SEBI kind of observations do not come. We give approval and it is valid for 12 months. And the fifth is that once you get the approval, you can open up the IPO. And once you get the IPO, you can the funds comes into the company. So the entire step 1 to step 7 takes around, say, 5 to 6 months time.
Okay.
So this is the timeline. But the biggest time which is required, see, I'm working with NSE for the last 14 years. And there must be 1,000 of promoters I've met in my career. So I always tell them the maximum time will be taken is in changing your thought process. Because as an unlisted company, you have a separate thought process. We all know in India, particularly SMEs, prepare balance sheet from a tax perspective. Okay. Profits are shown as per tax perspective. So that, usse aapko bahar nikalna hai. So the real profits, etc. needs to be shown because the valuation of your IPO will largely depend on that. So again, I would say the timeline is changing of your thought process plus 6 months. That is the timeline.
When I speak to a lot of dealers, the new generation definitely, or the older, either of the new or old generations, the business is highly family-owned businesses. So the thought is that, I am convinced, but how do I convince my family to go and approach the public market? You rightly said the thought process itself changing is a bigger issue.
I will just add one more thing, Ajayji. Of the 1,000 plus promoters who I've met in my entire tenure at NSE, 95% of the businesses were family oriented. 95%. And out of that, 99% businesses never thought of listing, ever. So this was a completely new concept to them. लेकिन वहीं से 605 कंपनीज आए एनएससी में एंड बीएससी आल्सो हैव 500 प्लस कंपनीज सो वहीं से 1100 कंपनीज आके लिस्ट किए हैं एंड मेनी ऑफ देम हैव माइग्रेटेड टू द मेन बोर्ड आफ्टर 3 years you complete in the SME platform you get an option to migrate to the main board so out of the 605 companies 606 companies 142 have migrated to the main board.
Prakash, I would want you to throw some light on there is a strong conception that if I am a profit-making business, why do I need to get listed? One, you said that if you don't do it, somebody else will get it listed, but that may not be a valid reason for a lot of businessmen. And there is a strong feeling that getting listed is an exit. Is going to stock market is an exit, or is going to a stock market for something else?
Thanks, Ajayji, for asking this question. This is a very, very important question for all of you. And we keep interacting with the promoters and we tell this again and again to everyone. So let me first answer your questions and then also make a mention about what Avik mentioned just now. So you are actually not exiting your business, you are diluting the stake in your business. And let us understand this, and with a simple example that if you have 100 shares today and you are going public, then you are printing additional 25, 26 shares. You are not giving anything from your own pocket at all. So as somebody from the exchange in the past had mentioned, and I'm repeating this here, that there are only two people in this country who can print notes. One is the RBI and the second is the promoter himself. So this is very, very important point, and I keep getting this repeated question that the family is not happy, family doesn't want to dilute. Actually, you are printing new shares, you are not giving your own family shares. So this is very important for all of us to understand that the dilution is happening from your total shareholding, and your total shareholding is getting increased at the time of IPO when you yourself get more shares through bonus shares. The reserves which are sitting in your balance sheets gets converted into the shares, and over and above that, then you print another 25, 26% dilution shares and give it to the public. Again, if you have already diluted, say 5%, 10% in the journey through some private equity or whoever you would have friends and family, then you are not even diluting further, you are only diluting the balance because only 75% or less is what the promoter can have in a listed company. So the straight answer is that you are not actually giving anything from your family or your own holding. It's the new shares which you kind of issue to the investors, the new investors. I want to add what Avik mentioned. Why should families go for public listing today? So let me give you some thoughts, and this is very important. See, ultimately, we are here to help you understand what is the concept of listing and why should you do it. Now, on a daily basis, we come across balance sheets where the turnover is 300, 400, 500 crores, and the profit after tax numbers are 3 crores, even 50 lakhs sometimes with such a big turnover. So I'm not getting into the illegality of what is happening. I'm just giving you a concept or a very strong thought that if you are kind of disclosing lesser profit, say 1 crore, you are actually saving what is 30% of that as tax, but you are foregoing the valuation by 20 crores. Let me further add to what I said. Now, when you raise this 20 crores against every 1 crore of profit, you also get an opportunity to get 2 times debt, which anyways you need. So you are actually, again, it's a ratio of 1:2 first, equity versus debt. So the total 1 crore actually converts into 60 crores, which you are losing by not showing 1 crore of profit. So please be mindful, 25 March is approaching. Whoever is interested in going this way, we should be very, very careful about what should be the final disclosures in the financial statement. So families, we do counsel families to understand what exactly is the process, what happens after IPO, what are the responsibilities, what are the benefits and the difficulties. Probably we can capture that in our discussion further.
Thanks, Prakash. Avik, there is another concern or the question which audience has is that what is the kind of cost for getting listed in this stock market, and what is the recurring cost? Every year, is there a huge cost burden that comes on the balance sheet of the company if they go public? So if you can give us some idea on that.
So basically, the cost towards the exchange is very minimal. We have a processing fee of 25,000 rupees and the listing fees of 50,000 rupees largely. And there is an annual listing fees, which largely depends upon the market cap of the company. So if the market cap, say, is of 100 crore, it will be somewhere like 2 lakh rupees a year. So largely the cost goes towards the merchant bankers. There are various merchant bankers. There are some in Calcutta, some in Gujarat, some in Mumbai, etc. So you can negotiate with them and you can come into a kind of a deal with them. So how much would be the cost? One important thing I will tell you that in case of SME IPO, there is a hard underwriting obligation towards the merchant banker. That means अगर main board में कोई IPO आता है वो subscribe नहीं होता है तो that IPO will fail. But if an SME IPO comes and it doesn't get fully subscribed, the merchant banker needs to buy the remaining shares. So there's an underwriting fees which they charge. So that you can negotiate varies from merchant banker to merchant banker. The fixed cost which would be there is largely towards the regulators. It would be like towards the annual listing fees towards NSC, the fees towards the RTA, towards NSDL, CDSL. And as per rule, you have to keep a company secretary on payroll. So the salary of the company secretary would be the fixed cost in that case.
So, these are nominal, not something which is very huge.
Kind of benefits which you get out of listing, the visibility, the access to funds, etc. This would largely be nominal only, I would say.
Prakash, another thing is, like a lot of dealer friends, they have multiple brands in multiple entities. So what should be the structure? Every company get listed, or they create a holding company, then they get listed? Any idea on that if you can?
So you know what, basically there is a stage of structuring of your business before you go for the listing process. And this can be evaluated that what is your main business and what are your other ancillary businesses. If those ancillary businesses have scope for independent listing, we should sell them into different companies and not club them with your current businesses, number one. Second, if you think that those are going to be ancillary businesses and do not have an independent life in the listed market, you can keep them as your revenue lines, club them together with your business, and look at the consolidated revenue and the profitability and get that balance sheet forward for the listing. So that's the way you should approach this.
Yeah, thank you, Prakash. And Avik, on the regulatory side, so if there is a change of shareholding, if the family transfers or the promoter wants to sell the stake, so does the stock exchange have any influence on these companies? After listing, yes.
No, as Prakash was saying that 75% shareholding might be with the promoters and 25% would
Minimum
be
requirement is 25% dilution.
25% has to be always with the public. Now,
Okay.
if 75% is there with the promoters and the promoters want to sell some shares, they can definitely do so in the open market. I think up to 5% they can sell every year, and there are regulations up to that. And they can also transfer their business, etc. So even you will find that many of the listed companies are doing that. So as such, there are provisions in the SEBI, LODR, in the Companies Act, etc. Following that, these transfers can definitely be made.
So the fear of succession, the business getting transferred in the family members, or fear of losing control is not there if they go for the listing.
No. Largely, if you see, 75% is a huge amount of shareholding which would be there with you. And secondly, these investors are financial investors, and you will not have all your shares with one investor. जो common perception है कि if someone takes my 25% share, what will happen? These are all scattered investors who would be across India, and they do not know your business. They don't want to sit on your chair and do your business. It is your business only. You have to carry on. They will like the company to grow. If the company grows, the share prices will go up and they can make profit out of it. So losing control of the business in a normal condition is something which usually doesn't happen.
Thanks, Avik. Thanks, Prakash. I think
I want to just add something on this losing of control. So there's something called a widely held company and a closely held company. As a private company, you're a closely held company. The shareholding remains with the family and some distant family members or some friends or some directors and all. A widely held business is a large listed company which all these big main board companies you see today. So unique shareholders have very limited control on the business. They would rather look at the performance of the company, and therefore they would be happy with what you are doing as a management of the company, and they would not be getting into the control of the company. So eventually you are not losing any control of the business. You are rather bringing in more investors, and once you become very large, say 1,000 crore market capitalization or more, the large institutional investors start looking at your company very closely and they invest into it. So the way I look at it, if you do an IPO, you are planting a money plant. Each time you need money, your equity becomes your savior. You can get more and more money from your equity side. And that also accelerates your growth because you can further raise capital through raising debt by sometimes even pledging those shares. So eventually there is a 3x effect of whatever you do in the overall capital market. If you raise one side of equity, you get two more sides or two more x of debt. That should not be ignored at all. And I know the automotive dealer business is heavily dependent on working capital. You have large inventories. You are practically not manufacturing anything, but you have to keep inventories for 1.5 months, 2 months, something like that. And that's a huge number for each one of you. Probably today you would have exhausted all your capital and the possibility of raising debt. It is time for you to evaluate whether you should do an IPO or not. We have seen, as you mentioned, there are two IPOs which happened in the dealership. One happened from South, the other from West. It's time for the Eastern India to now take the leap. I know there are a lot of people here sitting in this hall who are capable and willing to do it. I think you should definitely evaluate it at this stage. And I'm sure you will have all the reasons why you should do it now.
Thanks, Prakash. I was talking to one of the promoters of the company which recently got listed, and they rightly said that in 25 years of building my business, I was only answerable to my family. But now I am answerable to 10,000 shareholders, and one should go public when they want to work more harder to grow their business rather than looking for an easy exit. So
you know what, discipline further accelerates growth. So being disciplined is not something which should be a challenge to any one of us. We should definitely go that way. Ultimately, financial discipline helps us to kind of get the right reporting done, get the right set of deployment of capital is very important for all us. So objects of the issue is the ultimate thing. If you are raising capital for the right thing, the investors will invest into your company. And if you are deploying that fund for the right objects and you further generate capital for these investors, I think the stock market will always bless you.
thanks, Avik, thanks, Prakash. I think you guys have given us enough, thoughts to rethink on, our idea of going to public markets.
Thank you so very much, moderator. Thank you, panelists. Well, now I will request Mr. Abhinav Agarwal to kindly please join us here on stage. And I will request Mr. Abhinav Agarwal to felicitate Mr. Avik Gupta. I now request Mr. Ritesh Agarwal to kindly please join us here on stage. And gentlemen, I would request you all to kindly please be here with us on stage. Mr. Abhinav Agarwal, so I would request you to kindly please be here with us on stage. Thank you. And I would request Mr. Ritesh Agarwal to felicitate Mr. Prakash Agarwal. Can we have a round of applause? Thank you, ladies and gentlemen. I'll announce. मैं announce कर दूंगी group photo के लिए. I would now request Mr. Bishweshwar Debnath to kindly please join us here on stage. I request Mr. Debnath to felicitate Mr. Ajay Agarwal. Can we have a round of applause, ladies and gentlemen? Now it's time for a group photo opportunity. Can we have all of you in the center? Thank you so very much, gentlemen.